Hi, this is Lee Gettess with the Market Sense for the week of October 19th, 2010. That's the 23-year anniversary of the crash of '87. Boy, do I remember that. The charts we're looking at are from the Trade Navigator software from Genesis Financial Technologies, and the first chart is the weekly bond chart. As you can see, bonds have attempted to go higher here, and it looks like sort of a double top. They didn't quite make this old high here, and then they've turned down pretty hard, and they're back up a little this week. What I would expect is there's resistance right around this green line here. It's about 133.08. I would expect them to have difficulty in that area and get turned back down, possibly down to that purple line or the magenta line, whatever you want to call it, the mid-Keltner channel, which is actually down around 128. There's a possibility they could find support higher up, like 129.16. We have this old low right here, which is just above 129, and it's very common for a market in a distribution process to poke just marginally through this and then turn back up again. So I'm kind of looking for them to find resistance here, break down, and go lower, take out this low, but not by a whole lot. So somewhere in this area makes a lot of sense to me. Of course, I'm talking about an idealized setup, and they don't often give me idealized stuff, which is why 129.16 could be support and not allow them to get to that low. Now in stocks, they're grinding up a little bit. They had a big down day Tuesday, but started buying them right into the close again, so it still doesn't look like anything significant is happening there. Support is just below the market here in the 1153 area, and the low was like 1155 and change on Tuesday, so maybe they're just not going to get there. The resistance above the market is at 1186. I think the important thing on this chart is if you look at the overall price pattern, it looks remarkably similar to back here on the left side of the chart. It looks very similar to this price action that we saw in March and April. And you can see that ended rather violently in what they called the flash crash. It's unusual to have two patterns set up identical on any chart you look at, and so my best guess is that when this tops out, and I think it will sometime relatively soon, when this tops out, you probably won't get this violent reaction like we got the last time. This is probably going to be more of a distribution top where they swing down and swing back up and maybe go new highs, maybe not. But I expect this will take a little more time to form a top rather than ending so abruptly like we did back then. So that's what we've got for you today. I hope you can find something profitable that you can get yourself into. Thanks for checking in, and we'll probably do it again next week.